It's often agreed upon amongst investment professionals that investing for the long term is essential to financial success. But are everyday investors listening? It appears not. This chart looks at the average holding period investors have towards stocks. Over the last several years, you can see that investors are holding stocks for way shorter durations, and this trend has headed downwards for quite some time. But what could be driving this trend? While finding all the reasons might be challenging, the democratization of finance and the democratization of information are two big contributing factors. But what do those even mean? The democratization of finance has been going on for years, and it essentially means banking and investing has become more accessible to more people. Think about mobile trading, low or zero commission transactions, the rise of index funds, robo-advisors, and more as examples of the democratization of finance. The democratization of information, on the other hand, refers to the digital age that we live in. There are now over 5 billion people on the internet, more than half of the world's 8 billion, and the news cycle is relentless today. We often hear about events at rapid rate times, sometimes through unlikely avenues like Twitter or Reddit. However, in investing, it's often said doing nothing and resisting the urge to act on the news cycle is a big step towards winning. After all, there have been some studies that show investors with high trading and transaction frequency being linked with worse returns. But with more and more investors thinking with a short-term mindset, it is perhaps more important now than ever to think long-term and go against the grain.